Everyone, my name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter.
Hello.
Thank you for joining us today as we're looking at the fundamentals that are driving the markets currently. So Peter, how have the markets been behaving?
Well, we had practically a US dollar which continued to gain ground across the board against its counterparts. I would dare to say that the US dollar seems to be further supported by two elements. A, there were some hawkish comments made by Fed policymakers. It was characteristic that Chicago Fed President Evans yesterday stated that there seems to be a wide consensus among Fed policymakers that rates should go up to 4.5%. That would be up until March. And then there seems to be also the idea that the Fed would be pausing its rate hike in order to see what the effect will be on inflation, and at the same time provide some level of confidence for for supply chains to recover. Now, overall, the comment was quite hawkish and may have even exceeded market expectations somewhat and tend to provide some support for the USD. The second issue, which may also be providing a boost for the US dollar, are safe haven inflows. Given that we have geopolitical tensions, which tend to increase uncertainty, hence the US dollar may be getting further inflows.
And how about the US stock market?
Well, US stock markets yesterday sent out some mixed signals. We had a pausing of the drop, but overall the bearish tendencies are still present. It was characteristic that during today's Asian session, once again, all three main indexes of US stock markets were in the reds. And I would have to say that we have, despite the Fed hawkishness and the overall uncertainty in the markets and the worst for a possible recession, stock markets are also worried about the possibility of the earnings report season not playing out as good as they may have expecting. I would dare to note, though, that in contrast to the market expectations, the US economy may not be in that bad shape as the markets expect, and that could imply that the earnings season could be somewhat better.
And what's new with the pound?
Well, we have a pound which tended to stabilize against the US dollar yesterday. And we have to note here that we had on the fundamental level, on monetary policy level to be more exact, BOE, which announced that it will be intervening in the markets and will be buying practically UK government gilts. It even announced today that it will proceed with buying UK government gilts which are related or linked to inflation of around £5 billion, and that would be per day up until the end of the week. At the same time, we had UK Finance Minister Kwarteng, which announced that the UK government will be announcing its fiscal plans by the end of the month. That was practically an expedition. It was expected to be announced at a later stage. So there is an effort to reassure the markets and restore the confidence of the markets to the UK government. For the time being, we still see the UK government being on shaky ground. And we have to note that even the UK employment data, which were released during today's early European session, did not actually excite pound traders, despite being better than expected. For example, we had the unemployment rate, which ticked down, or the employment change figure, which dropped into the negatives, yet not as deep into the negatives as the market may have been expecting. The average earnings growth rate practically accelerated, which would imply that the UK employment market is to continue to feed inflationary pressures within the UK economy. I would be highlighting today BOE Governor Bailey, which is to make some statements and could be shaking up the pound a little bit. And should he sound hawkish enough, we may see the pound getting some support.
And what about the euro?
Well, across the channel, the euro is in a difficult spot in the sense that we still have the energy crisis which is surrounding Europe. I would be noting among the headlines of yesterday that Germany seems to accept the idea of common borrowing among Eurozone members. Now that, on the one hand, may be increasing the borrowing costs of the German government. On the other hand, though, tends to provide a relative stabilization in the sense that we may not see spikes of yields for countries such as Italy or Portugal, which may have more difficulty in borrowing money. At the same time, I would also be noting that the fact that Russia yesterday rained missiles on Ukraine tended to weigh on the euro, as that would imply practically a further escalation of the war in Ukraine, which may create further uncertainty at the southern eastern border of the Eurozone.
Also, JPY has been weakening, right?
Yes, and the JPY, especially against the US dollar, that's more evident, has dropped practically reaching over 145 yens per dollar. Now that's a level at which 2 weeks ago Japan intervened in the markets, started buying buying yens, and in order to defend its currency. So I wouldn't be surprised to see Japan once again intervening in the markets in order to defend the yen. Yet, this time we may see Japan's efforts intensifying, so the market operation may widen. On the other hand, though, the root of JPY's weakness is still present, and it relates more to BOJ's monetary policy outlook, which remains ultra loose, and that may cause JPY to weaken once again.
And what's on the calendar for today?
Well, the rough spot is already over. However, I would be noting that we have a number of Fed policymakers, and as well as BOE and ECB policymakers, which are about to make statements and could sway the market's opinion once again. Other than that, I would expect a cautiousness in the market to still be present.
Any final comments?
Well, I would like to see whether the US stock markets will actually restart their drop further in the American session, especially as US stock markets are opening. Other than that, I would be advising cautiousness practically on the US dollar, the euro, JPY, and the pound. And I would be also noting the Aussie. The Aussie has been weakening as overall there is a cautiousness in the market, as we have mentioned, and the Aussie is considered a riskier currency as it is a commodity currency. So we may see the weakening of AUD also intensifying.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Yosif.
So welcome to the technical analysis part of the presentation. My name is Peter Yosef. I'm the senior analyst, market analyst of IronFX. Together we'll be going through initially the US dollar index charts. It's the 4-hour chart. Please note that all charts to be presented are to be of the same time frame unless otherwise stated. Now we can see that the US dollar seems to be about to correct lower. It's characteristic that the last two candlesticks in the 4-hour chart are practically red, implying that during the late Asian and early European session, the dollar is dropping. It should be noted that the index is dropping after surpassing even slightly the RSI indicator, the level of 70, implying that the index may have reached overbought levels and thus is correcting lower. The big question is whether the upward trend line, which was initiated practically since the 5th of October, will be broken or not. Should the upward trend line be broken, clearly be broken, that would force us to switch our bullish outlook in favor of a sideways movement bias, possibly between the 113.70 and the 112.50. So that would be a movement like this. On the other hand, should the bulls regain control or regain the momentum, given also that the RSI indicator is still at rather high levels, while the 20 moving average, the 100 moving average, and the 200 moving average are all having an upward direction along with the upward trend line, we may see the price action of the US dollar index actually testing the upward trend line, reversing direction, rising, breaking the 113.70, and start aiming for the 114.70. For a bearish scenario, we would require a clear breaking of the pre-mentioned upward trend line. However, we would also be requiring a breaking of the 112.50 support line and the price action of the US dollar index to start actively aiming for the 111.65. Let's have a look at Euro USD. Euro USD, which also shows some signs of stabilization, yet for the time being seems to be respecting the downward trend line guiding it. Once again, we tend to maintain bearish outlook as long as the price action remains below the downward trend line, which was initiated practically since the 5th of October, in which case we may see the price action dropping, breaking the 0.9635, which provided support around the 29th of September, and start aiming for the 0.9540, which was able to reverse all this downward motion here on the 28th of September and move it upwards. On the flip side, should the stabilization be maintained, we may see the price action of Euro USD breaking the downward trend line, yet possibly respecting the 0.9735 resistance line and the 0.9635 support line. So that would imply practically movement between the two levels. On the other hand, for a bullish outlook of Euro USD, we would require a clear breaking of the pre-mentioned downward trend line, a breaking of the 0.9735, and the price action to start aiming, if not even testing, the 0.9835 resistance level, which provided resistance here. That would be around the 30th of September, and even provided some commotion around the 22nd of September. Let's have a look at cable. Cable, which has a clearer view, seems to have stabilized after bouncing, or if you prefer, finding some support on the 1.1025 support line. So we tend to switch now our bias for a downward movement in favor of a bias for a sideways movement, possibly between the 1.1210 and the 1.1020, most probably nearer to the S1 rather than the R1, in which case we may see the price action maintaining its current direction. On the other hand, we have to note that despite the correction high of the RSI indicator, it's still at rather low levels. It's currently at 42 almost, and that would be implying more or less that there's still some slight bearish sentiment in the market for cable. So should the bears regain control, we may see the downward trend line, which was initiated on the 5th of October, being shifted to the right, and the price action to drop, break the 1.1025, which provides support yesterday, as well as practically around the end of September. Let's have a look. Yep, that would be the 30th. So in a bearish scenario, we would expect the price action to break the 1.25 and start actively aiming for the 1.0790. I know it seems to be a wide distance to cover. However, for the pound, such a distance is a matter of a day. You can see the price action here and here. I wouldn't mention this one or this one, or to the upside, this one. So cable has the volatility, has the capability to actually, drilling back to the forward chart, to cover such a distance within a day. That should be no issue. On the other hand, should a bullish scenario occur, we may see the price action rising, breaking the 1.1210, and thus paving the way for the 1.1425. Okay, let's have a look now at USD/JPY. Safe haven currency pair, USD/JPY. Let me adjust this, breaking clearly above the 145 level, a level which has been a high for over 24 years. We cannot see it at this chart, but the last time it had seen such levels was in 1998, if I'm correct, if not 1997. Drilling back to the forward chart, readjusting the level. Yet there seem to be some signs of stabilization for the pair as well, as it fails to create higher peaks and seems to have stabilized somewhat, meeting the upward trend line we have drawn yesterday and was initiated around the 5th of the month, sorry. So should on the one hand the bulls regain control and push the pair higher, I would expect it to start approaching the 147.30 resistance line. On the other hand, a possible stabilization could imply that the pair's price action breaks the pre-mentioned upward trend line and remains just above 145, with the possibility of the Japanese government actually intervening in the market and buying yens, which could drive the price action lower. Mind you that in the last market intervention, there was this one. Note that the pair here dropped, let's have a look, 550 pips. Yep, around 550 pips. So I would expect the price action to drop dramatically and sharply, in which case I would expect it to break definitely the 145 support line, the 143.50, the 141.50. Note that it had dropped lower at that day, and possibly start aiming for the 140. Okay, let's have a look now at the other safe haven currency pair, and that would be USD/CHF. The USD/CHF, which seems to have broken the upward trend line guiding it. Hence, I would expect, or if you prefer, I would switch my bullish outlook in favor of a stabilization of the pair and the bias for sideways movement, possibly between the 1.0050 and the 0.9960, something like this. Should the bulls regain control over the pair, we may see it rising, breaking the 1.0050, start aiming for the 1.0120, a level which has seen no price action practically for a while now. Let's have a look at it. Drilling out to the daily chart. And practically the last time it has provided resistance was here. It was near the end of May 2019. Let's be more exact here. Yeah, it was on the 20th of May 2019. However, it also provided resistance here. That would be the 6th of March and around the 13th of November 2018. Readjusting, drilling back to the 4-hour chart. Give me a sec. There we go. Now we covered the possibility of the pair remaining in a sideways motion. On the other hand, should the bulls regain control once again, given that the pair could move higher should the US dollar strengthen further, we may see the price action reversing direction, breaking the R1 or 1.0050 and start aiming for the 1.0120. On the other hand, should the bears take over, and that could occur in case the US dollar strengthens or the CHF weakens, take a pick, or both, we may see the price action dropping, breaking the 0.9960 support line. Mind you that the level was a prior resistance line, yet given that the price action has moved above it, has switched its role from a resistance line to a support line. Nevertheless, the S1 would be broken in a bearish scenario, and we would expect the price action to start aiming for the 0.9860 support level, a level which provided resistance a number of times, but also some support. So it should be taken notice of. The RSI indicator is correcting from the highs of 73, and it's currently at 63, which is still pretty high, but there's a clear downward slope, which may be leading to the reading of 50 and a stabilization of the pair. Let's have a look at the Aussie. AUD USD, which is currently testing the 0.6270 support line. We see that the pair has a downward movement, a downward trend line, which is guiding it lower. Yet, even also the downward trend line is being put to the test. Should the pair actually obey the downward trend line, we may see it dropping, clearly breaking the 0.6270 and start aiming for 0.6110, a level which practically has not seen any price action drilling out to the daily chart since here. And that would be the 8th of April 2020. On the other hand, note how the S1 provided, the 0.6270 provided nice support around mid-April 2020. It's beautiful. Okay, drilling back down to the 4-hour chart, readjusting the chart once again, and the support and resistance lines. Here we are. So we have covered the possibility of a bearish scenario. However, the downward trend line is being put to the test and could be broken, clearly broken. In which case, I would expect the price action to practically rise and remain between the 0.64 and the 0.6270 levels. That would be practically a step down and a stabilization from the prior movement. On the other hand, for a bullish scenario would require a clear breaking of the mentioned downward trend line. That would be the first initial signal that the downward trend has changed. And the price action, though, to break above the 0.64 resistance line in order to signal that the bulls are in the game. Also, I would require the price action to reach or start to actively aim for 0.6530 before calling on the bulls. Note how practically the level provided substantial resistance over the period from the 28th to the 5th of October, from 28th of September until the 5th of October. Okay, let's have a look at USD CAD. USD CAD, which has risen, practically tested, but the main element of the rise here is that it seems that a higher resistance level is being confirmed, and it's about here. It's a slight correction, but nevertheless a useful one. At 1.3840, maybe in 45, let's have a look. Yeah, let's lock this in. Okay, let's make the readjustments. Here we are, a little bit high with this label. Beautiful. Now, I would require, I know we have shifted the R1 a little bit higher. That's a good reason why, because it seems that it has peaked here. Yet that would also imply possible continuation of the stabilization of the pair. On the other hand, though, we have to note, and I feel quite strongly about this, that there is an upward trend line guiding the pair. See it? It's very beautiful. It has consecutive higher peaks, with the last one being performed practically in the late Asian session today, and consecutive higher trows. So we have an upward movement which is consequential, it's continuous, and I wouldn't be surprised to see the price action rising even further. Maybe there may be a correction lower before that, but overall I would expect the bullish tendencies to continue as long as the upward trend line remains, as long as the price action remains above the upward trend line. In such a case, we may see the price action rising, breaking above the 1.3845 and start aiming for the 1.40. Note though that the RSI indicator has peaked and is correcting slightly lower, yet remains at rather high levels. It's currently at 66. So that could be implying a rather bullish sentiment on behalf of the market for USD CAD. On the other hand, should the peak here signal the end of the upward movement, we may see the price action correcting lower, stabilizing, and remaining below the 1.3845 and definitely above the 1.3650. That would imply stabilization. On the other hand, should the bears take over, I would this price action to start dropping, breaking the pre-mentioned upward trend line. I would require also a breaking of the S1 1.3650 for a bearish scenario to prevail. Just dropping is not enough here. We need to see more concrete evidence that the pair will be forming lower trows and lower peaks, and the breaking of the S1 would be signaling such a scenario. And that would practically pave the way for the 1.3419. See how beautiful it provided support here. Could go even a little bit higher. At one point, let me correct this, 34.95. It could go even higher at 1.35. It is. So once again, for a bearish scenario to occur, we would require a drop of the price action, a breaking of the upward trend line, a breaking of the 1.3650, and the price action to start actively aiming for the 1.35 support level. Let's have a look now at the Kiwi. The Kiwi, which seems to be guided by downward trend line. Yet the downward trend line seems to be put to the test right now. I would like to drill into the 1 hour chart. There it is, which shows us more detail in order to draw the downward trend line. Definitely this is it. It has a very shallow slope, but still it's there. And it's being put to the test right now. Okay, let's have notice how there are consecutive higher peaks, lower peaks. This one, this one, this one, this one, this one, now this one, which is almost equal, but there are also lower troughs here, 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 and here. So there is a downward trend line. The question is, drilling back now to the 4 hour chart, the question is whether the price action will stabilize and break it, or whether the 0.5570, it is, will be broken instead, as it has been in the past 24 hours and multiple times. And the price action is to continue lower, starting to aim for the 0.5450. For a bullish scenario, I would require a clear breaking of the mentioned downward trend line, the price action to rise, and aim, if not even test, the 0.5750 before actually initiating a bullish scenario here. Note how the RSI indicator bounced practically on the reading of 30 and is now at 39, which is still pretty bearish. It's not a fully bearish scenario, but it shows us that the bears still have an influence on the pair's direction. At the same time, though, I would be noting that the RSI indicator seems to be on the rise, so it has an upward slope, and may imply more or less that the bearish effect is wearing off, and instead it's being replaced by a relative indecision on behalf of the market about the direction, the future direction of NZD-USD. Now, should the pair drop, I would also be noting that the price action could be hitting the lower bulge band, which may slow down the drop somewhat. On the other hand, I would be highlighting that we have two elements here about the bulge bands. The first would be A, that the bulge bands, the upper and lower one, the boundaries, are converging, implying less volatility. On the other hand, though, the median, the 20 moving average, is practically highlighting the downward motion of the pair and implying that there's still more to come here. Note how it has just broken below the 0.5570. It would be interesting to see what's below 0. When it found support for the last time at the 0.5450. Let's drill out to the daily chart here to have a quick glance. Okay. It's pretty low level. And it's a level which has not been seen practically since the, let's have a look. Since 19th of March 2020. Drilling back into the 4 hour chart, readjusting the levels, It is. Okay, you requested to have a look at gold as well, and your stock markets and WTI will do that. Just give me some minutes. Starting with gold, downward motion initiated since the 7th of October. However, let's draw a downward trend line here. And this is more visible if we drill into the 1 hour chart. See how it was peaked here, peaked here. But note also that this, the last 1, 2, 3, 4, 5, 6, 7, 8 candlesticks seem to show stabilization. It's at rather low levels at 1660 for the precious metal. Now drilling back out to the 4 hour chart, let's make the necessary corrections on the levels. Definitely the S2 and the S1 now become resistance levels. And let's go hunting for new support lines. One would be here, but I would prefer one here to mark this loop through here. And that would be the green piece, 1635. And another one would be here at this through here. And that would be the 1615 in green as well. Look this in. Let's correct also the labels, starting with the R1, sorry, the S3 being placed at 1615. The S2 being placed at 1635. The S1 being placed at 1650, actually, 51, 52, 51. This support level could be a little bit higher here, as it is at around 1652. Let's see the resistance lines, far wider at 1680. First resistance line, but how it provides the resistance here and here. The 1706, which used to be support line, but given that the price action has moved decisively lower, its role has been reversed and from a support line has become a resistance line. And this peak here is to set us the R3, the ultimate resistance level, at 1730. So we have a downward motion guiding gold's price, and we tend to maintain that bearish outlook. On the other hand, though, I would be highlighting the fact that on a technical level, the RSI indicator below the 4 hour chart, let me disable the camera in order to show you. Or reaffirm the bearish sentiment of the market. On the other hand, though, it may imply that the precious metal has reached oversold and may be about to correct higher. Okay. Okay. Should the bears though maintain control, and we tend to keep our bearish outlook as long as the price action remains below the downward trend line, we would expect the price action to drop further, break the 1652 and start aiming for the 1635. It's not a wide distance. On the contrary, it's quite narrow for gold's volatility. On the other hand, see how steep the downward action is, and note how the price action from the lower Bollinger Band still has some ground to cover, allowing practically for some room for the bears to play here. So once again, we maintain our bearish outlook for the time being, and I would expect the precious metal to drop below 1652, thus paving the way for the 1635 support level. On the other hand, a possible stabilization of the precious metal could be also in place. Note that how near the current level we had support levels here and here, which may play a role here as well. In which case we may see the price action stabilizing. Definitely a first sign of a change of the trend, of the bearish trend, would be a breaking of the downward trend line. And at that point we would expect the price action to remain between the 1680 and the 1652 in the spectrum here. On the other hand, should the bulls take over, which for the time being seems to be improbable, but it's still possible, we may see the price action reversing direction, breaking the pre-mentioned downward trend line as before. However, this time for a bullish scenario to prevail, we would require also a clear breaking of the 1680 resistance line. Okay, beautiful chart. Let's have a look now at Dow Jones. Dow Jones, which has regained its bearish tendencies, yet I would require clear breaking of the 28,915. But before that, let me make the necessary corrections here. And definitely the 29,670, as it has been broken, has to switch its role from a support line now to a resistance line. Let's go hunting for a new support line. Daily chart. Unlocking the chart, allowing to move freely. So we have some spectrum. Drilling back to the forward chart. We have some. I would be noting this level. Note this touch here. And provided some commotion here as well. Otherwise, we could move even lower. Resistance line, support line. And testing again, I'm keeping this level. Okay, let's readjust. Let's make necessary corrections here. And that would be the, in green please, 27,115 and 50. Okay. $130, 28,915, 29,670, 30,340, and the final resistance line now being placed at 31,180. For the time being, we tend to maintain a bias for sideways movement. For a bearish outlook, note the downward trend line. And I would require, though, also clear breaking of the S1, which has provided support here and here. Note also that the RSI indicator is at the reading of 30, implying exactly that bearish sentiment on behalf of the market. So as long as the price action remains below the downward trend line, we maintain our bearish outlook. And I would expect it to break the 28,950 and start aiming for 28,130. Mind you though that the S1 level provides substantial support here and here. Let's have a look also at WTI's price, which must have jumped. Oh, that was a correction lower. A deep correction from WTI's price yesterday, breaking practically the 90 support line and aiming for the 86.30. So let's make the necessary corrections once again. This would be a level to watch out for. Note the true here. That would be the 79. In green, please. Let's reverse this in red, as the price action has dropped below the trend line, the support line, and its rule has now been reversed to a resistance line. Let's widen this. That's all it goes. And the S1 at 86.35. The R1 being placed now at 90. Price action cut through it like hot knife through butter here. And the 92.30. And finally the 95.30. So for the time being, we tend to maintain a bearish outlook, given the steep drop of the commodity's price and the breaking of the prementioned upward trend line, which was guiding it since the 28th of September. And in that case, we may see the price action of WTI actually hitting, if not even breaching, the 86.35 support line, which provided support here, resistance here, support, resistance, support. So it's a pretty valid level to keep an eye out. So that should sum it up from all of us here at IronFX. Best wishes for solid trading.
Hello, my name is Christina and welcome to another educational video. The terms mine and yours were used by traders on the trading floor to signal buying and selling of securities. The term mine was a buy reference, while yours was a sign that an individual wants to sell an order. These terms were used with other similar terminology in the open outcry system. This system refers to the trading pits before 2010, where traders used verbal communication along with hand signals to convey trading information. In these marketplaces, large group of dealers and brokers engaged in competitive buying and selling. The words mine and yours were used to express the intention to buy or sell, respectively. Both buy and sell were also common. For instance, a dealer in the interbank market might type or speak mine to a counterparty of broker if they wish to purchase a specific currency. The trader will say yours, signifying it's yours if they were to decide to sell. In the same way, if a floor broker offered 100 call option as $1 each and a market maker decide to purchase them, they could respond by shouting mine to indicate their intention to do so. Both of these words were used to enable quick and precise transactions in a market that was frequently chaotic and active. Today, the words mine and yours are both still frequently used, mostly in the Forex market. Additionally, they continue to be employed in the same context as they did under the open outcry system. Thank you for watching.
Right, so in today's session, we'll be talking about trade management, part 2 of 4, where we dip into break even and partial profit placements. So before this session, there is a part 1 of 4, where we talk about take profit and stop loss placements. So if you guys have missed that session, I will direct you later on to the website to rewatch our recorded web series. Okay. Hi Jamal. How we confirm trade entry and trade exit. Do you mean to enter a position and exit a position? Okay, for that, we have another series because there are different ways of entering a position depending on what strategies you are using, right? So that will be covered in another series. So maybe let me share with you guys where you can watch. Let me just take a look. Let me just bring you guys real quick to our IronFX page. Okay. So on the IronFX page, later I'll copy a link and send it to you guys. Okay. Give me 1 second while I pull up the. Okay. So on the IronFX page, just under the webinars, right? You can see all our different webinar. This is what we are touching on today, right? So this is the live session that I'm hosting now. So moving forward, if you're interested, you can actually sign up and register. For example, on September 15, which is tomorrow, there will be a live trading session hosted by Jin. So you can register if you want to know how he enter a trade and exit a trade, right, Jamal? Okay, so on this page, not only can you see what's upcoming, you can also look at our previous session, recorded session, past webinars. I'll copy the link and paste it here for your convenience. So these are the past webinars that we have. For English, you just click on the English, and these are the past series that we have recorded, right? If you missed any of this, feel free to come here and check it out, because these are very useful sessions that might be able to help you understand the basic and the fundamentals of FX beginner trading. Okay, so other than that, I also want to direct you guys to our VIP room as well. So recently, the Forex Army, or the Everest Fortune Group, which is our company, have a special and exclusive partnership with IronFX, where we have a special VIP trading room, which is this. Okay, so long as you have an account with IronFX, you can get access to this depending on how much deposit you have in the account. So in this VIP trading room, you get exclusive market forecast, because daily we will have daily forecast, daily market updates, daily news, fundamental news that is pasted there for you guys to take a look. Okay, ask our experts, myself, Desmond, as well as all our other prop traders and analysts will be there to answer your questions. So if you have any questions, feel free to ask on the VIP room. Okay, or you can also request for market forecast as well. So for example, you can say, hey Desmond, could I get what's your take on yen, USD yen, or Euro USD, right? So it's a tailored service that we have that caters to what you need. So there are 5 tailored account types depending on how much you have deposited, right? So deposit 250, 1,000, and it caters to different assets on that page. Okay, so let me bring you guys there to take a look at how the service is like. Just a brief introduction to the VIP room itself. Morning, Francisco. Welcome to the webinar. Okay, so this is how the platform itself looks like, right? Depending on what is your account size, and then it will cater to different needs of your trading needs. So there is a section where you can come in here and chit chat. You can ask us questions, ask us about what take we have on different currency pairs. Potential setup is where us, the analyst, for example, Desmond, he will come here to actually place his take if he has a setup that he is potentially looking at himself. So he'll come here, he'll post, any of us can post here. So this is our take on potential setups. And for news-wise, daily we will update on fundamental news or what is important. So for example, yesterday, right, there is the USD CPI news that came up. So what we expect will happen in the next couple of hours or the next day will be written here for your viewing or for your analysis, right, to help you, to assist you. Okay, so Euro news, USD news, gold, oil. If there is anything that you don't see here, you can let us know as well. Okay, then we have our major pairs, the DXY, the USD pairs, etc. Commodities, indices, crypto, everything, any currency that you are looking for, just let us know if it's not here. So how is this a tailored service? So for example, this morning or rather, maybe let's take a look at BTC. Okay, so today, one of our prop trader, I think it's just quite recently, about 3 o'clock, right? SGT, Singapore time, 3 o'clock. So our prop trader Chen, he came in. He actually plotted some of his analysis. So how this work is, for example, you have some questions for us. You can say, hey Anna, I'm looking at a key level here. You know, we can highlight the level. Okay, let me just put it here. I can highlight the level and click it to exactly where it is, right? So even if I delete it away, when you hover around the highlighted words, your lines will still be there. So it's very clear exactly where we are talking about, okay? So we'll come into the chat, we'll highlight important areas for you to look out, what are the key levels, etc. Okay, so this is the basis of IronFX VIP portal. So feel free to check it out. Let us know if you have any questions, right? Okay. Okay, so let's begin today's webinar series on trade management, part 2 of 4, break even and partial profit placement. So how many of you guys have actually tried or know how to put your break even and take partial profit? Do you guys use that often, or is that something that you haven't thought about, haven't seen? Let me know if you have any questions or any comments, because I have another page that is open, so I can see exactly what you guys are typing, or yeah, I can see any questions that you have. So feel free to type there and I'll answer whenever I can. Right? Okay, I have some answers that says that you do not know how to use break even, or you do not take partial profit. Okay, this is a very important risk management. We can say is risk managing as well. Okay, part of your trade management tool as well, because it's important to know where your break even point is. Okay, partial profit placement is important as well, because you don't want to go through a turmoil. Imagine you are trading on a 4-hour or a daily chart, right? There will always be this emotional turmoil that you go through, not knowing where your position is, So placing partial profit or taking partial profit is good sometimes. Okay, so before I start the session, disclaimer again, the information in this webinar should not be considered investment advice or an investment recommendation, but instead can only be taken as educational materials only. So if you were to trade, please do your own due diligence. Okay, so this is me, your host today. I'm Annabelle. So I'm an analyst here at Everest Fortune Group, which is an award-winning research firm, finalist for Best FX Research 2019, 2020, 2021, and finalist for Best Equity Research 2020, 2021. Okay, so I'll be bringing you guys through today's session on trade management part 2 of 4. For those who missed the part 1 of 4, you can actually go to IronFX page to check it out. So part 1 of 4, which I will touch a bit on in this session, which is the take profit and stop loss placement recap. Right. Let me grab my pen. Can I? Oops. Give me 1 second. Do I have a? Yeah, okay. Okay, I'll use blue then. Okay, so agenda for today, I'll start off with anatomy of trade for those who missed my previous session. So anatomy of trade meaning it's not just only your entry and your take profit, right? In between, before your entry, in between, during your trade, and as well as before your take profit, there is a lot of other steps that are essential and as important as your entry itself, because most of us would only focus on the entry part, right? You'll spend a lot of time, you analyze the charts to find the best entry, but we always miss out the in-betweens, which are as important. Okay, so that will be covered in anatomy of trade. Then we will have the recap on take profit stop loss placement. This is in the previous session, part 1 of 4 in the trade management, which is as important. Then we'll have the break-even definition. Oh, this should be, yeah, correct. Break-even placement, break-even definition, break-even placement, partial profit placement. So this series is relatively easy to understand. I'll put it as simple and as understandable as possible. Okay. Yep. Let's move on to the next session. The next page. Oops. Oh no. Okay. So anatomy of trade. Like I've mentioned before, right? The anatomy of trade. I'm just grabbing my pen. Just give me 1 second. Okay, so for the anatomy of trade, do I have my pen? Okay, this is irritating me. Okay, I'll just use this pen. Okay. Okay, so most of us, we are always very fixated, very focused, we put a lot of focus here on the entry because we are always looking for the best entry, right? Looking for breakouts, looking for reversals, depending on what's your style of trading. But we are always focusing a lot, like probably, I would say 60% of our efforts doing this first. Okay. Let me know in the comment section if I'm correct, whether you guys also focus a lot on the entry part. I'm pretty sure most of us focus a lot on the entry part to catch the entry first, and then we will do our risk to reward after, correct? Or we will only think about our stop loss and take profit after. These are often afterthoughts. Or personally for myself and our few of our other colleagues as well, right? These are often afterthoughts, okay? So what we mean by anatomy of trade is that all of these are as important as your entry itself. You shouldn't be just focusing all on entry, okay? There is your stop loss, your take profit placements. These are definite. You have to have it. Break even partial profit is good to know, but I would say it's not as important as your stop loss and take profit. Okay, this is just a gauge, you know, at the back of your head to know, hey, you know, am I at my break even? Am I losing money? Okay, this is a good to know. It's a good knowledge. And then partial profit is a management style where for people who do not want to go through the emotion, you know, especially with very liquid markets, you know, and very volatile markets where your movements can be extremely volatile itself. So if you do not want to go through this kind of turmoil, you can learn how to take partial profit as well as trailing stop. Trailing profit is trailing stop, okay? And then the last part will be idea invalidation. Okay, so this is part 1 of 4. This will be part 2 of 4, and then 3 and part 4 of 4. Okay, this will be covered in the rest of this session moving forward. Okay. Okay, let me move on. So let me do a brief recap on what is take profit stop loss. Okay, let me look at the comments. Sometimes my entry point, right? Okay. Okay, so take profit and stop loss. Do you guys remember how you should be putting your take profit and stop loss? Maybe I will divert the attention here instead. Okay, I will just go to a random chart. Okay, so if you guys remember my previous webinar series, maybe I use euro, okay, because I saw one that was quite nice. One will be a good example. Okay, maybe this one. This is good as well. Okay, so for example, if you have an entry right here, you feel like it will move. Okay, this is a recap, yeah. So if I have a entry here, you feel like, hey, you know, my trend is in a very bullish manner. I will look to do a buy position here. Okay, I have a buy here, and I feel like it will go up. Where should your take profit be? Should it be at A? Should it be at, okay, this is a bit messy. 1 second. Should it be at B? Or should it be maybe C? Okay, maybe here, C. A, B, or C? Where should your take profit be? Let me know in the comment section. where should your take profit be? If you guys have tuned in, please let me know that you have absorbed what I've mentioned previously. Where should you put your take profit? Is it A, at the previous high, C, beyond because it might potentially shoot up, or B, before the previous high? Okay, I have very good answers. All answer B. B is correct. Okay, the reason why we always put at B is take profit before your magnetic or resistance level. Okay, so this level here, let me just erase. So this level here, it will be a fight zone, okay, given that it connects back all the way as well here. So this is a key resistance area that we will want to avoid because a lot of fightings or a lot of commotions will be happening here. So you do not want to come to this level and go through the emotional ride, okay? So always take profit slightly before your resistance or magnetic zones. Okay, so B is the correct answer. Very good. Let's play forward. No doubt sometimes it will touch exactly at the peak or at the very prime area, but it's preferable to take slightly before because you do not want this to happen. Imagine you are very profitable right here, right? You have a 90%. Let me erase all the drawings. Okay. So imagine you have a 90%. Your entry is here. Your buy entry is here. And then you put your take profit here exactly at the peak. This is where it happens. So imagine if just because you want to have the full 100% of take profit, when the price came here, you ignore and it fell all the way back down to your, probably your stop loss is here. Okay, you do not want this to happen. So always take profit slightly before. Okay. Okay. So like I've said, like I've mentioned, you always want to take profit before. Oh dear. Okay, you want to take profit before, slightly above, depending on whether you are doing a long or short position, because if you are long, you take before, correct? This is for long positions. You take before the resistance. If you are doing a short position, right, you take above. Okay, for both is considered called before, but it's depending on whether you are looking at the lower section or the upper section. Okay, so always take before for take profit, and then for stop loss, always put beyond because you need that extra buffer. Okay, in case price spikes up and come back down. So you need that extra buffer for stop loss. Okay, so remember, avoid your major resistance area because this is where all the fights will happen. Avoid it. Okay. So what is break even? So for those who do not understand or are new to break even is the point at which your trade neither makes nor loses the money. So basically it's right at where you start. Okay, so for different brokerages, sometimes they might charge you some fees for trading. Imagine you open your position here, entry, for example. Okay, you have to take into account the commission charges or all the extra charges that they have included. So maybe your break even might be slightly above. Okay, so maybe your break even is actually here. Okay, so break even point essentially is right at your entry because there is no you neither make money or lose money at the point. So it's basically you can treat it as your entry point. So that is your break even point. Okay, and the price at which you have entered during the trading position, or the level at which the risk on the trade is recovered. So it's dependable on how you view it as, but essentially it's just where you have entered your trade. Okay. Okay, so break-even placement. For example, so you have a buy entry here on the breakout, hoping for price to push to our take profit. Okay, so then you have a stop loss line that is here. Okay, break even is triggered here. Right, so break even is a level where you are in profit and recognize that there is a risk of reversal back to your entry. It is basically you saying, if I am right, price should go all the way to my target, but if it goes back to my entry, I'm wrong and I should get out. Okay, so the break even entry is placed here. As you can see, right, it's in the yellow color or the beige color, as you can see here. Okay, this is the break even. Let me indicate it for you guys. Yellow is break even. Okay, and then you have the green, the grayish, which is your buy entry. And then this is your TP and your stop loss. Okay. So you can see here that the person entered a trade here. Okay, the gray is the entry, right? So the price moved up, but when it came back down, I took a break-even position. Okay, before it hit my stop loss. Can you guys see? Maybe it's not it's a bit messy the way they put the wordings, but maybe later I will show you in a live example how break even is placed. Okay, I think there is some slides on it. Let me just move to the next session. Okay, this might be a better example. Sorry, that one is a bit confusing because of the wordings. Okay, so here, this is your entry, right? So for break even point, it will be at the entry, as you can see. Okay, so this is the entry. And then we have our stop loss, which is placed beyond, slightly beyond the swing low. And then we have the take profit. Okay, this is how it's portrayed here. Entry, stop loss. I'm expecting price to go up this way. Okay. Right. Okay, so you can see here, when my price is starting to move up, correct, I can place my partial profit to be here. Instead of having a full take profit, I can take some partial profit here. Okay. And or I can also move my stop loss up to my break-even point. So essentially, if my price reverse, I'm not afraid that I will lose money, correct? Because as humans, we are afraid of losing, correct? Technically. So with this profit, you do not want something like this to happen. For example, if let's say I didn't move my stop loss, right? If I didn't move my stop loss, it will look like this. Imagine price came all the way here, move up, came down, you get a heart attack, people will start to panic, but you feel like it will continue to rise, but it keeps going down to your entry. You will want to fight it back. You wait again and wait, and it hit your stop loss. Okay. Usually some of the times, okay, we might not have the discipline, to to do proper risk management or proper stop loss take profit positions. Okay, but having an idea on your break even or partial profit taking is good to have this idea. Okay, to start with these ideas, because maybe sometimes you can actually try to move your stop loss above or take partial profit. Okay, if you haven't done so, this session is to give you that idea. Okay, that partial profit and break even points actually exist, and it might not be that bad of a risk management tool. Correct? If you try it, maybe it works. No, instead of having to be stopped out, okay, you are at a break even. Okay, some of us might be, you know, greedy, and then we want to trade the work. All of us, when we enter a position, we always want to trade the work, but it's not always the case. Okay, so having the break even tool or knowledge is good, because sometimes you can move it up to your move it up so that you won't lose your winnings, or you won't get tapped out, okay, per se. So if I move my stop loss above, see, if it comes back down, I would not lose any sum of money. Okay, or if I have taken a partial profit there, I would feel better that, you know, hey, luckily I have taken some profits here instead of being so greedy. So it's also dependable on what the market information is telling you, correct? Because sometimes I know we have done a lot of analysis here, blah blah blah. We always, like, you know, think that our trade is always correct, but you have to also take into consideration what the market is telling you. Okay, so when your market is telling you other information, you have to analyze on the spot and make some changes to your take profit, stop loss, break even, and maybe you can take partial profit as well. Okay. Okay, so partial profit placement is exactly this. Let me bring you guys to the charts. Okay, might be easier to understand right here. Okay, if you have any questions, feel free to ask me in the section. I'll try my best to answer. Okay, so for example, let us go to, okay, we'll stick to Euro then. Okay, so for example, if I'm going to take a entry here, maybe here, I will take an entry here. Okay, I'll take an entry right here. Yep, where the previous swing low is. Can you guys tell me your watch? Oh, okay. Okay, can you guys tell me where would you actually, or where is the break even point? Is it at A, at B, or at C? Where is the break even point? Let me move this up. Where's the break even point? Okay, I have some answers that tell me A. Okay, very good. Yes. So the break even is always around or at the entry, where your entry is. Okay, so this is the break even. Okay, I would place my stop loss maybe here. Okay, let me just set up the trade, then I can explain further. So for example, I'm looking for price to do this. Okay. Okay. So for example, change the color to green. Okay, so I am bullish. For example, I'm bullish on my Euro USD. Okay. And then I have my buy entry right here. So when price came here, okay, when price come here, so for example, you have the entry, your entry is here, my entry is right here. For example, when it broke, right, and then I'm looking at this support. So when it broke, probably my entry is here, okay. Price move up, okay, in my favor, I'm very happy. And came down, typical move. But when it comes here, most people will panic, right? Because this is the point where you do not know whether you should take profit or not, right? You do not know, hey, should I take profit? Should I close the position? Or should I just hold on and wait for the price to move this way? Okay. So there is a couple of actions that might happen here. One, I take profit. Correct? Right here, I already probably gain a couple of pips. I just want to take my money and go in case the price actually come back and touch my stop loss. Correct? So I could actually take profit. Number two, I can wait or hope that price will come back up and leave everything else as per usual. Right? I will still place my stop loss here. I'll still leave everything as it is. Okay. So what would you do? Will you take the profit and close the position? Or would you wait and hope that, price should go in the direction you have analyzed for so long for this entry? Yeah, most of us would actually wait because we have spent so much time entering and analyzing a trade that we want our trade to be correct. So most of us will wait instead of take profit or close the position. But have you guys ever thought that you can move your stop loss from here to here, so you will not lose any money, or in case price actually flies back down from here to here? Okay, so the two stop losses that I have shown is, one is here, your previous stop loss. This is the second stop loss. Okay, so from here, imagine the price already came here. If you are so afraid that you might lose, or you are, human instincts are naturally, we do not want to lose the money or our idea. So if you do not know how to move it, this is how you actually do it. Okay, so you have a peace of mind, correct? From here, you move to here. So in case you can move up slightly a little bit for those who still want to take that small 1 pip or a 0.5 pip of profit, but usually we'll just put it at the entry level. Okay, so this is one way that you can manage your trade as well. So move your stop loss if you do not want to close the position, correct? Because you don't want to lose your idea. You don't want to lose the idea, or you don't want to lose in monetary sense, correct? So move your stop loss up. Okay, for those who haven't tried or who do not know. Okay. Another way is you can take partial profit as well. Okay, but some people, they do not like to take partial profit. It's all or nothing, right? I mean, it's logical because you have already calculated your risk to reward. You have done all your risk management. You feel like there should not be any partial profits to be taken. I understand that, but there's no harm trying, okay, to take partial profit. So for example, when my price actually came up here from this level, when your price actually moved from here to Okay, usually there will be a take profit. Okay, so for example, if your take profit was to be here, okay, and price, let me adjust. Okay, so price is here now. For example, okay, I'll just leave it there. Okay, so price is actually moving in favorable, okay, to what you are looking at. Okay, now, so if you're waiting, okay, for your trade, waiting and waiting, shit, what happens here? It's coming downward, and then you see like, hey, it's telling me that, you know, it might actually reverse from here. You're worried, and you wait again, and then there's a big candle that is coming down, and you're worried. And this candle actually shows that, you know, there is a big or a heavy, strong sell pressure. What will you do? Would you wait? Or would you take partial profit? Okay, I have some answers. Okay, I have different answers, both of which are okay because different traders have different ways of trading. So, and you see this, obviously, if it's me, I will panic as well. Okay, so you can actually take partial profit off here, or you could actually move your stop loss even. Yeah, I think you can take partial profit off here. Okay, depending on what the market is actually telling you, right? There is also trailing profits to be taken, but that won't be covered in this series. So we will stick to partial profit first. So you can take off partial profit if you feel like, hey, maybe I should just take the 60% instead of having to lose my 100%, correct? So there are two ways that you can see this. Is number one, you can take the 60%, correct? Or number two, you can just move your stop loss right here. So instead of taking 60%, you want to wait, hit exactly to your 100%, okay, while not hitting your stop loss. Okay, so two ways. You can either take partial profit or you can move your stop loss to the break-even point. So both kind of works the same way, right? It's depending on what trading style you have. Are you the type that you want to take a full profit because you think that your levels are very accurate, right? Because by moving your break even up here, it means that you kind of want to wait for the full 100%, correct, instead of taking a 60%. So it's depending on what idea or what kind of trader you are. You can take partial profit or you can move up your break-even point, right, or your stop loss. Okay, you can even move your break-even further. Okay, so maybe at this point in time, for example, okay, we will use another chart. If you have any requests, let me know. We can analyze as well. Okay, let's take a look at, okay, this one, it might be, this is a double top. Looks juicy. Okay, let's take a look at this. Okay, for example, so this was a trade that I was looking at, right? There's kind of a squeeze here, which I'm a bit uncertain. So it might just do this, right, before a fly, which I'm hoping for, or it might just pull back down. Depends on whether there are any fundamental news as well. So right here, take profit. Let's do this. Okay, I am looking at a buy here. Buy here. Take profit here. Okay, stop loss here. Now, maybe I'll move to 1 hour. Might be longer. Yeah. Okay. Can you guys let me know where would my break-even point be, given this scenario? Where would my break-even point be? Would it be at here, A, B, C? Where would my break-even point be? Okay, remember your break-even point is always, this is C, right? Sorry, I kind of forgot because I didn't indicate. Okay, so usually your break-even point tend to be at your buy entry. Okay, for Emerson, is there a reason why you said slightly above C? Is it why is it slightly above C? Okay, so always remember that. Always remember your break even is always okay. Always remember that your break even point is always around your buy entry or sell entry, correct? Because that is where there is no loss or making of any money. So break even means 0. Okay. So if my buy entry is here, for example, and then price actually came up here. Okay, number one, if you want to do a partial take profit, you can, because you do not want to go through the emotional roller coaster, right? Or you feel like, hey, there is a market news that is coming up. Okay, these are all the small factors that might affect your trade decisions, right? Because right now I feel like, hey, USD yen might actually rise all above to my take profit or even beyond. But there might be news that, you know, US have come up with some regulations or whatever that is affecting my yen. That small fundamental news or announcement might actually affect price movements. So always listen and always understand what the market is feeding you. All the information are as important. You know, these are the small factors that might affect you or the price action. So when prices come up here, you can actually take partial profit, or alternatively, you can move your break-even point or your stop loss. Okay, up. Okay, so you can move. So there are a couple of methods. Yeah, yes, it's correct. It's spread, Emerson, correct. So you can actually move your break-even point further up. Okay, so you are still in profit, or you can take a partial profit. Okay, so there are a couple of methods that you can use for people who want to take the full profit, who wants to take the full PP, the 100%. Yes, you can actually bring your break-even point up or move your stop loss up. Okay, for those who do still want to take some profits home, do not be afraid or do not be embarrassed to do so, because it's all depending on your trading style or trading methods. So taking profit is extremely good as well. Okay, so imagine your prices came all the way here, taking a 60% is also good. Okay, Okay. So let me know if you have any requests or any question. Hi Gwen. Hi Gwyn. Okay, you're quite late to the session. If you have missed the front portion of today's webinar on trade management, feel free to log on to our IronFX page and download the recorded webinar series to watch, right? Okay, because we are almost coming to the end of the session. Okay, so let me know if you have any requests before I end today's session. It's a relatively short and easy topic to understand, right? So it's just about the anatomy of trade, how you can move your break-even points. What is a break-even? Your break-even placement, your partial profit, and your partial profit placement. So these are relatively easy to understand fundamentals, but it's about applying it. You know, you can have this knowledge and idea, but if you want it to be useful, you have to apply it, be it on a demo or on your real life account. You go ahead and try it. It might be useful, right? Especially you're moving your break-even points. Okay, because most often humans are greedy and we always want to validate our trades, right? When we enter a trade, we always want our trade to be correct. Okay. Yes, Henny. Yeah, partial profit is better than hitting a stop loss. Definitely. Nobody likes to hit a stop loss. Everybody wants to be correct when you enter a position, right? Thank you, Elvis. Yeah, so when we enter a position, most of the traders, we always want our trade to be correct and validated. We do not want it to be we do not want it to go to our break even, or we do not want to go to stop loss. Okay, this is a mental barrier, I would say, okay, for the break even part, because you always want to be correct. So you do not want to break even, correct? That is logical, but break even is a very useful trading risk management tool itself. Okay, so please try it. Okay, overcome the idea of break even. Okay, break even is not losing. Okay, it's just telling you that, hey, you know, maybe this trade don't work out, but you do not lose anything, instead of being stubborn and having this mental barrier for price to go to your stop loss. You know, so try moving your break even or your stop losses, or try to even take partial profits. Okay, sometimes my R to R is 1-to-1, but when the market moves, you know, the emotions are there, so I will tend to take partial profit, which is not wrong, because if, let's say, I have 10 trades and 8 trades I take partial profit, I'm still very profitable as a trader, right? Given if you have 10 trades and you only take 2 full trades, right, and 8 loss, I think I'm a better trader than you. Okay, so taking partial profit is not wrong. If you have a high win rate or high take partial profit rate, it's still very good. Okay, in the long run, if your R to R is maybe your R to R is 1-to-2, but if you take partial profit at 1:1, it's actually extremely you are extremely good trader. Okay. Okay, so I have come to the end of today's session. I hope I have imparted you some of the knowledge that I have about trade management, taking partial profit and break-even points. Okay, don't hesitate to try it, because once you try it, maybe you will like the method or the strategy itself. Okay. Yep, I will see you in the next session on let me see, what is it? I think I trade invalidation. Okay, it's about the mental, it's a psychological thing, and we also have our partial stop loss, trailing stop loss, okay, that we're going to talk about in the next part 3 of 4 and 4 of 4 for trade management. Okay, so thank you guys for tuning in. I will see you guys next session. Bye.
Everyone, my name is Emily and welcome to another educational video. The word Goldilocks is a reference to the popular children's story Goldilocks and the Three Bears. The term is used in finance to describe an economy that is just right with steady growth and normal inflation. It is an ideal economy that is not too hot and not too cold. In other words, it is a Goldilocks economy. In this balanced and healthy economic system, there is full employment, economic stability, and steady growth. The economy is not expanding too much to push inflation too high, and not slowing down to enter into recession. A Goldilocks economy is also good for investing and trading. In a growing economy, companies also grow and generate positive earnings, resulting in their shares performing well. Goldilocks economies are temporary in nature because there are boom and bust cycles. While there may be disagreement among economists about what the exact characteristics of a Goldilocks economy are, the basic idea is that there is a balance between growth, employment, and inflation. The ideal conditions for a Goldilocks economy are low unemployment. Unemployment is measured with the unemployment rate, which reflects the number of people willing and able to work but unable to find gainful employment and who have sought work in the past 4 weeks. The Federal Reserve estimates a normal rate to fall between 5% and 6.7%. Another condition for a Goldilocks economy is asset price inflation, which refers to an increase in prices of shares, real estate, derivatives, bonds, and other assets. Low market interest rates and low inflation are also important, as well as a steady gross domestic product. The GDP is the most essential indicator for a Goldilocks economy, as it measures the value of all services and goods produced in a country and reflects the health of an economy. For example, a negative GDP in 2 consecutive quarters indicates a recession. On the other hand, a sharp increase in GDP can push prices too high and result in high inflation. An example of a Goldilocks economy is the US economy of the middle to the late 90s, but also the US economy after the bursting of the dot-com bubble between 2004 and 2005. Thank you so much for joining us today, guys. See you soon. Bye-bye.